Hello dostum, welcome to Smart Investor. Today we are going to learn and explore an interesting strategy for options. So let's get into that. Before get into that, please do remember any point of time if you like this video, please do like button and subscribe and share so that it helps me to motivate to come up with more videos and to help us better. Thank you. Let's get into that without wasting much time. Let me share my screen so it helps you to make it understand much better. What are the market conditions? Generally, we look into that before taking any strategy. What are the requirements? Requirement number one. Requirement number one. It should be a risk-defined strategy. Okay. Number two. Number two. Are no adjustment. Generally, no adjustment. If any strategy without adjustment, yeah, that is, we can say, we can prefer. So no adjustment, point number two. And point number three, in that risk defined, that risk would be very low risk. No, we know we are going to have this year general elections, a parliament election around in the month of May, right? That is the election month. If so, what is going to expect? We are going to expect the VIX normally VIX, right? It's going to high. VIX is the important tool we need to understand. So if you take the strategy, this VIX is going to play a critical role. What is that? In the month of May, if we get elections, as of now, VIX is around 13 or 13 around 13.58 or 14, right? If VIX is like this, then by the election time, by the month of May, what is going to happen is uh, it may go 30 around. We are not sure. Okay. That has happened in the previous election and before election also. Before election, it went up to 30, or previous election, it went up to 38. So current VIX would rise up. So what is the advantage? If VIX goes high by that time, what happens? So option premiums will be shoot up. So right, options premiums shoot up. Then which option premium will go high? This is the important. What is that? Just I want you to understand Vega. What is Vega? Just simply, it's one of the Greeks, option Greeks. Vega is the one of the Greeks in options. I'm not going to explain in detail about Vega. Vega means every 1% rise or fall in the VIX, right? In VIX or volatility, in implied volatility rise or implied volatility change 1%, value of premium Vega, right, would go high. Vega is a positive value. So option premium would also be changed as per the implied volatility. Moreover, in Vega is very high for long-term options. Long-term options, Vega is high, and short-term options, Vega is low. Hope it is clear now, right? Having seen these 5 points, we need to build up a strategy to benefit this event as well as to benefit time value, right? This strategy name is, I call it, we call it, this strategy is name is put calendar spread. Sell near month options and buy a long-term option as 4 month options. We discussed, right? Vega is high for longer term and low for shorter term. Means, so with the time value, we need to see much decay. So that is short term option. Yeah, higher time value and higher longer term options, we need to see higher value when VIX rises. That happens in longer term option. That is buy. So with this value, we need to see a strategy. So parliament elections is maybe month of May. If we assume that it is a month of May, we'll see elections, right? May and June series options we get, and December options is a longer term will buy. This is the one, right? So May or June we see that is quarterly, right? So we will go to June sell, and December, what happened? December, we buy. So with this, will benefit this option. What is put calendar repeat? Put calendar means near month option sell, same strike. Sell means same strike, and for month options buy, which means, so what we are going to do, we take 22,000 option June month, sell, and December month option we buy. Hope it is clear now. So we are going to take 22 to the thousand option June sell and December buy. What is the premium? Maybe, yeah, the premium is around, let's say, 800 rupees as of now. So 800 rupees June option sell, and maybe somewhere around the same price, 800 rupees December option buy. Here another advantage is that we see time value in the June, in this time value in December comparatively very difference is there. June and December month option is same premium, which means June will time value very less, and December premium time value is very high. So that is an advantage. Will benefit from this strategy as well. Let us, I'll show you that in payoff chart. Let's get into that. Let's go to, as we discussed, right? Yeah, month of June, 22,000. Where is 22,000? Sell 796. In December, 22,000 buy. This is the payoff chart. So what happens here? So when market goes, what is the, if you, when you look at this one, right? If you see the market condition, right? Market up to till what level? 21,000. Till 21,000, if you see this break even, lower side 21,000, we are getting no loss. Upside, maybe around 26,000, we are getting no loss. What is the range we are getting here? Almost we are getting a range of 5,000 points. 5,000 points range we are getting, right? 5,000 points we see here, very good range. We are getting 5,000 points, is very good range, right? So which means this is the region I told in the beginning. It needs no adjustments. It needs no need to monitor market or every day. The strategy, even working people can easily deploy it. Housewives can easily deploy this strategy. 5,000 point range, and market moves violently either side. We don't need to worry that. So we are getting such a big range, and profit is around 77% profit. We'll see here. Percentage is, if it is, of course, we don't get a max profit. We don't keep this strategy, we hold this strategy, but 77% is profit side. Of course, loss is also, yeah, one lot 36,000 required. Maybe that entire capital is gone. So the loss is there. But yeah, we'll see that the loss part, how we can handle loss part, we'll see that. Let's say month of May, around 30th. Right? If it stays here, yeah, you will get 26%. But the VIX in the month of May would be very high. Right? It very high means, let's say, I'll put it here. Let's say 30. 30 is the VIX. If this is 30, then accordingly, this premium of December would also go high, but that is not reflected because I just keeping this one only, but we'll see this year also, let's say 30, let's say 30, right? Or it is a maybe 25, not required to be 20, so 25. Then if it happens like this, what is going to happen? Market stays here itself. Market stays here, 21,500. it's here, then value of the strategy would give you very good profit, because VIX rises, market stays here. But then, so let's say market moves to maybe 22,000, even that profit would go very high, 30,000. Let's say market goes down, that is also possible, right? Let's say market goes to 21,000. Yeah, even 21,000. Earlier we thought that a break even, what was the break even? 21,000. But VIX goes high, that break even would go down. Means even 21,000, even 21,500 also. See, 20,500 also, still we will be in good profit. Where are we going? Even see, break even is 19,400 also. It is giving more profit. So profit is like, we'll see, even 20,000, till 20,000, even we are in green. So this is some expectation. This is some assumptions. Okay, maybe we are not sure exactly how market is going to behave in the month of May or before that. So based on the spot, based on the Greeks, based on the VIX and Vega value, the premium would change. But ideally, this strategy with this condition, if you need to benefit, so this is the one, put calendar will give you more profit. So if market is even bullish, here will get more profit. So overall, so if you understand this, right? Let me reset this one. If you understand this, what are the major scenario we need to benefit from this strategy is that so far we see only neutral here only. For market, by month of May, market stays there only. Normally, we know that we are going to get a stable government. If we get a stable government, or BJP government comes into the force by the next elections, right? This election, then market would definitely may take some upside movement. Means market from here 21,500 to, let's say 20,500 to, it may go to 22,000, or maybe 23,000. Wherever you go, right? We have a more upside range, right? With this range, if you ask for the strategy, then this put calendar spread for at this time, this is very important. So this strategy definitely help us to make good profit if market is within our expectation range. Of course, market falls. Let's say we can ask, market falls 19,000, market falls 18,000. Definitely, this strategy will end up making losses. So market is bearish, or market is, you think that takes 20%, another 10, 20, 30% correction, don't take this strategy. Market takes another 5, 10% upside, definitely this strategy would give you profit. VIX rises, this strategy would give you profit. These are all scenarios. All these scenarios, this strategy is going to give you good profit. So I have taken this strategy already 2 weeks ago, and which is already running a good profit. I will show you that my values I told, yeah. So almost, if you see my thing, almost both values almost equal. At that time I took two lots. I took, as of now it's showing 2,200 profit. But I still hold it. Generally, I don't worry about this market condition, right? So you have enough time, enough things to happen. So I have hold this strategy. And maybe one of you may think, or may ask, Ganesh, what if market comes to this level, right? We cannot predict. We cannot say market will not get correction, or will not go down below 20,000 or like that. We may think that. If that is the case, what one can think about that, in any month, or monthly or bi-weekly or weekly, one can do that, right? Downside break evens 21,000, right? Suppose around that. So go 21,000. We are in, let's say we are in January. What is the 21,000 premium value? 10 rupees, right? What we can do? Buy 20. So yeah, this is getting over, right? January getting over, but maybe yeah. So so what we can do, weekly we can buy like a far month option. One put one option. Every two option you can buy one. So that gives you hedge downside. Let's say February 1, I bought this option. Then what is the max loss is here? Max loss here we can see only 10,000 from two lots. I hold two lots. From here you can see max loss is only 10,000. Like this we can you can manage. So maybe you are paying premium for 1,000 rupees, right? Let's say 1,000 rupees for hedging your strategy. You may be spending some amount like this, right? Maybe yeah, you can spend some amount for downside hedge. If you are fear about downside, what you can do, yeah, obviously you can pay per month, maybe 1,000 or 2,000 per month, right? Maybe not just whenever you feel not comfortable to hold this strategy downside, you can take far month. I mean, you can take fast strikes, OTM strike. You can buy every two strikes. You have this strategy. One strike you can buy. That gives you complete production downside. That is how you can manage downside risk. This is the strategy all about that. Let me repeat this one, right? What are the advantage of this strategy? One is basically this is a new this is a neutral to bullish strategy. Neutral to bullish strategy. Number two, high range strategy. Almost we are getting 5,000 points. Even VIX rises, that range would even go much higher. And we discussed, right, zero adjustments and almost zero screen time, and rise in VIX would benefit the strategy more. It has all the advantages that we really want to see that. So put calendar definitely in the year of election year definitely helps us to get more advantage. Hope this video is useful to you, that you understand it. Please let me know if you have any queries in the comment section. I'll try to reply on that. Thank you for watching. Bye bye.